All right, so we hit another new high in the markets, the Nasdaq, the S&P, all making fresh highs. I want to talk about that. I want to talk about Bitcoin. I want to talk about some other stuff. First things first, if you get value out of the video, please like, subscribe, check out those links below. So getting right into it here, the main piece of news from this past week was the stock market hitting another new all-time high. The S&P was up a little over 2%. The Nasdaq was up almost exactly the same. This was a week where the equal weight S&P actually outperformed. Small caps outperformed. Mid caps, I believe, were about the same. The Mag 7 actually underperformed the Nasdaq and the S&P, so kind of an interesting week there, a little bit of a rotation there. And I think that's something that probably I don't see the Mag 7 absolutely destroying the market like they have over the last, couple years or so, just because a lot of these names are really overvalued. Now, again, obviously they could continue to outperform. Crazier things have happened, but I think that that's something that eventually things will have to change there. And something that's important to point out here is a lot of people are talking about, oh, the market's so overvalued, and based on PE, that's definitely true. But I seen an interesting point this week from Adam Koo, and he pointed out that the PEG ratio, which is the price to earnings when you factor in growth, right? Because if you have a PE of, let's say, 20, and you're expected to grow earnings 10% per year, well, that would be a PEG ratio of 2. Now, if you're expected to grow earnings by 15% per year, that'd be a PEG ratio of 1.5. So the whole point is that whether your PE is a 20 or a 22, frankly, that's not really that relevant. The most relevant is what is the expected earnings. And that's important because the recent earnings growth and the expected earnings growth from the near future and the past, recent future is higher than it was going back 20 or 30, 40 years. So that's something to point out, is that if you look at the PEG ratio back in the dot-com era, it was I think it was over 2, right? So based on PEG ratio, the stock market is actually almost 50, well, probably actually a little over 50% less expensive than it was during the dot-com era. So I don't think that the market is super overvalued. If I was setting a fair value on the market, it probably would be maybe around 6,000 on the S&P, maybe just below 6,000. So I think we're maybe 3, 4, 5% overvalued, but you have to keep in mind that timing the market is very, very hard, and especially over the short run. And over the long run, it is overwhelmingly likely that the market goes up, right? Now, again, it might not be, the 15% per year that we're used to over the last decade or so, but over the long run, the market is going to go up, right? It's not a guarantee, but it's overwhelmingly likely. And I mean, we're up, from the lows back in April, we're up about 25%, right? So there was a lot of people, I remember back in April, right, the early April, saying, hey, we still could go lower from here. A lot of the big, I don't know if it was like Morgan Stanley, one of those big investment banks, say, hey, the market's still going to go down another 5 to 10%. And again, these are professionals who they get paid very well to try and predict this stuff, and they still got it completely wrong. So as an average Joe, even if you follow the markets very closely, it's very unlikely that you are going to figure this stuff out when the professionals can't even figure it out. So my position is always be dollar cost averaging the markets, and always be dollar cost averaging the stocks you like that you think are a good price. That's my position. So getting into some other things here, and again, as far as stocks go in the near future, anything could happen, right? Anything could happen. Like I've said time and time again, a Trump tweet can move the markets, 5 to 10% in a week, right? I mean, he could start talking super hawkish again. That would bring the markets down. He could say, hey, we're going to lay off tariffs. That would bring the markets up. So it's so hard to predict. But again, the best way of going about it is simply to be short term, I don't know what's going to happen. Long term, it's overwhelmingly likely we're going to go up. That's the best way to handle it, in my opinion. Again, from Chris Milas here, again, this is just piggybacking off what I just said. Your investment portfolio should be constructed based on how you view the world in 2035, not 2025. So again, and this is how the market works. what happens right now is irrelevant, right? It's really irrelevant. This is why you see a lot of times when bad news hits the market doesn't sell off. And the reason for that is the market is forward looking. They don't care about what happened in the past or even right now. What they care about is what's going to happen in the future. And I think this is part of the reason why the markets have been up recently is that, the jobs numbers the ADP number was really bad this past week. It was really bad. But again, I think that what the market is saying, hey, is that, yeah, we expect some near-term problems, but we think that, in the next 6 months to a year, rates are going to be going down. We've probably exited I think we could possibly see a recession, in the summer and later this year, but everybody knows that Trump is going to appoint a dove who's going to take over in Q2 of next year. And what's going to happen then, they're going to cut rates, they're going to be doing QE, most likely, and the big beautiful bill has passed, right? It's passed. It's going, and that is going to be good for the markets. Now again, it's probably going to be inflationary. It's going to add to the debt, but it's going to be good for the markets. And I think that that's why the markets are hitting highs. And I think it's also good to see that, small caps and the equal weight index are going up as well, because, when it's just, the Meg 7 that it continues to break out, but not the equal weight, not the small caps, to me that's a little concerning. But the fact that the small caps and the equal weight indexes have done good as well, I think that that's also good news for the markets. The next thing here from Michael Saylor, public companies acquired 131 coins in the second quarter, growing their Bitcoin balance by 18% according to data provider Bitcoin Treasuries. ETFs had an 8% increase, or about 111,000 coins. So again, I've said time and time again that we, in the next, 6 months to a year, it could happen next week, but in the near future, we're going to see a massive run up in Bitcoin. Back in 2021, the big run up happened in the summer and in the fall. Now, again, I've said time and time again that I think that, again, a lot of people kind of scoff when you say this time is different, but I think that this time is different because I don't think we're not going to see, the 10, 20x every cycle. I think that's too optimistic, but it's also too pessimistic to say that we're going to see these 80, 90% drawdowns, because whenever we see, a 20% pullback, a 30% pullback, the ETFs and the institutional buyers, there's just so much buying pressure from them that I don't see how we get that big of a drawdown. And eventually, I think that more and more corporations are going to catch on to what Strategy, Semler, Metaplanet, et cetera, they're going to catch on to what they're doing. I've said time and time again that it's only a matter of time until, I don't know if every single, but, a good chunk, whether it's 10, 20, 30%, that's probably what I would guess, of S&P companies or even corporations in general are just dumping a certain amount of their profits and a certain amount of their cash in Bitcoin and doing it without even thinking about it. I think that that's something that's going to happen within the next, 10 to 20 years. Also from Chris Milas here, Strategy now qualifies for the S&P. So again, it's going to be interesting to see. I don't know when they do their rebalancing. I looked it up and I didn't actually see anything definitive. I'm sure if I spent enough time on it, I could have figured it out. But I did, a little bit of reading on it, and I didn't. Maybe it was just the article I read, didn't know. But I don't know when this is going to happen. But frankly, it's only a matter of time, because Strategy's market cap will keep going up. And again, if they're already a sub top 100 company in America, there's no way that you can have a company that's a top 100 company consistently and not have them in the S&P. To me, they're just throwing away money, and that it's too stupid of a decision. It's only a matter of time. If it doesn't happen this time, it's only a matter of time until Strategy joins the S&P. And another thing to point out is that they're joining new indexes all the time, right? They're joining new indexes all the time. So this is just more good news. So again, this is another important thing here. So let me get this straight. MSTR sells Strike for $120. On that $120, it owes $8 a year. or if you go 15 years, $120. 5% inflation is the real payback is $97. Buys Bitcoin with 120, grows to 6,142 at a 30% annual growth rate, pays back $997, holds $6,100. So that covers 767 years of $8 payments. So I've said this time and time again that, I mean, these numbers you could argue maybe they're a little bit optimistic, but still the point remains that I think what Strategy is doing is they're going to look back at it and be like, hey, this was like, Warren Buffett 2.0 levels of genius. Like, people have not caught on to this yet, and look at how good they're doing already, and yet virtually nobody has caught on to it yet. Eventually people will catch on to it, and when that happens, Strategy is going to be a top 5 to 10, maybe even the top company in the world, but they will be a top 10 company in the world one day. It's not a matter of if, it's a matter of when. From Eric Balchunas, IBIT is now the third highest revenue generating ETF for BlackRock out of almost 1,200 funds. It's now only $9 billion away from being number one. And again, this fund's only been around for a year and a half. So why is this important? This is important because if BlackRock is making this much money on their Bitcoin fund, what do you think is going to happen? Number one, they're going to keep launching more Bitcoin funds, number one. And number two, more companies are going to be launching Bitcoin funds. Like this is just so obvious to predict, it's not even funny. And what does that mean? It's going to be good for Bitcoin, right? So this is so obvious. The vast majority of people, even within, the professional people, they still haven't even caught on to this yet. But again, it's only a matter of time, right? It's really only a matter of time. So that's basically what I wanted to talk about today. So, like I said, Bitcoin was basically flat on the week. We did touch 110,000 briefly. We're back down to around 108, and a lot of people are bummed out because it's like, it hasn't done as good as people expected. And again, I'm not going to speculate on why the price isn't higher because, frankly, it is pure speculation. The one thing I do know is, again, you want to look at, when you're looking at investments, you don't judge them based on short-term price action because crazy things happen over the short run all the time. And again, you have to think about it is that if someone told you that Bitcoin was going to be 200,000 or even 300,000 by the end of the year, nobody would be shocked by that, even in the slightest, not even slightly shocked. But I mean, if someone told you that the S&P was going to be at 12,000 or even 10,000, even 8,000, I could see 7,000, but 8, 9, 10,000, that would be absolutely shocking to me, shocking. But Bitcoin being at 200,000, yeah, I would not be even remotely surprised. So again, I think it's only a matter of time until we see a really big uptrend in the price. Now again, we could see some black swan event that'll bring it back down to 70, 80,000. That's possible, but I don't see how stuff like this can continue and the price not go up. And for lack of a better way of putting it, I would say even skyrocket, because if you look at Strategy, Strategy is set to keep buying thousands of Bitcoin every single week. Metaplanet, probably hundreds of coins. Semler, not far off. There is an arms race going on. And again, when Strategy is in the S&P, when they're a top 50 company in the world, when they're a top 10 company in the world, a lot of these big companies, they can only ignore what Strategy is doing for so long. They can only ignore it for so long. And what happens when an Apple or a Google or a Facebook, what happens when one of those decides to pull a Strategy? I mean, look at Berkshire Hathaway. I mean, I don't think they're going to do it. They're way too, they're too. Look at Warren, right? He's too much of a dinosaur to change his mind. But some of these companies have tens of billions or even $100 billion just sitting in cash, right? I mean, MicroStrategy or Strategy, they have I think it's 60 billion roughly in Bitcoin. A lot of these top companies, they have more than that in Bitcoin. Now again, I'm not saying they're going to put 100% in Bitcoin right off the bat, but if an Apple or an Amazon, if they even committed to put 10% of their free cash flow in Bitcoin going forward, if they did that tomorrow, they'd have 500,000 coins in 5 to 10 years. And what happens when more companies start to do that? Like, it's going to happen at some point. Like, they can only ignore it for so long. So that's basically the point I wanted to get by. I could ramble forever on this, but I'm very optimistic on is Bitcoin especially, but the stock market, and I could see I could see another 10-20% pullback in the summer. I definitely could see that, but there's no way that we're seeing any significant drawdown, knowing that we're going to see such a dovish Fed going, this time next year. I would be shocked if the market was lower, but again, I could easily see a 20% pullback between now and then. So I'm not saying that go all out right now. I'm really not saying that. So anyway, that's what I wanted to bring up today. If you liked the video, please like, subscribe, check out those links below, and stay tuned for more.